Hello guys, good morning. This is Current Affairs Funda and today I am going to explain a very important topic for the perspective of banking exams and also some government exams. In this video lecture, I will cover the CRR repo rate and what is the means of reverse repo rate and what do you understand by the SLR. So first of all, CRR means cash reserve ratio and repo means repurchase options and reverse repo means reverse repurchase option and SLR is abbreviated as statutory liquidity ratio. These are all the basic fundamental of monetary policy. If RBI is doing anything in the CRR repo or reverse repo, so I'll tell you what the functions of CRR repo and reverse repo rates. So guys, it's a basic introduction and helpful for all your IBPS exams and Clerk PO. All the exams are very essential and these topics can be asked in any one of the exams. So I'll start a basic introduction on CRR repo and SLR and reverse repo rates. So guys, I have made a story for you. Actually the whole concept and fundamental I'll discuss on two ends. The one is Santa and another one is Banta. Guys, as per my speculation, if you are watching a story, it is helpful to understand all the theme in first time. So I have made a discussion story between Santa and Banta and this communication will help you and it will help you to understand the meaning of CRR, repo rate and SLR. So let's go ahead. So first of all, I'm telling you this is Santa. Santa have several doubts and this one is Banta and Banta will explain what is the CRR, what is repo rate, what is SLR. Okay, so let's go ahead for the conversation. So the first of all, Santa have a doubt like I have heard recently that Mr. Rajan means Mr. Raghuram Govind Rajan, this is the governor of RBI, has reduced repo rate by 50 basis points and everyone is saying that this is a good for the market. Loan EMI may also come down. What is the rate cut means actually? I want to understand this. Actually this is the question from Santa to Mr. Banta. Okay, so how Banta will explain, let's see. So first of all, Banta told to Santa, to understand this you first need to know how does a bank function. To understand the basic fundamental of monetary policy, you must need to understand what is the bank function, how does a bank function. Okay, so explaining it in next slide. So Santa asked why I should know how bank functions regularly. So Banta tells because all these are interrelated, all these terms are interrelated, that's why you have to know about what is the functions of a bank. So tell me, what does a bank do? This is my question to you. Tell me, what does a bank do? Okay, so Santa replied here, banks takes money from depositors and gives loan to earn interest. That way they keep everyone happy and make a profit also. This reply comes from Mr. Santa. So I think this is a very regular definition which Santa told to Banta. See what next comes. So Banta replied, correct. The definition you told, that is correct definition, but there are more to it. I will elaborate it. Let me explain this in a very simplistic way. I am explaining it in a very simplistic way. Bank needs money, okay, and bank can get money from depositors like you and me, and also from Reserve Bank of India. But bank also needs to pay certain interest to us and also to RBI, because bank is lending money from RBI. That's why bank need to pay certain interest to RBI and certain interest to us. So Santa, okay, fantastic. Santa understand the ABCD of monetary policy. And now Banta, let us try to understand first what happens when we deposit rupees 100 with a bank. Guys, this is a very practical and important question. What happens when you deposit 100 rupees with a bank? So Santa, I know that bank gives that 100 rupees to someone who needs a loan. Everyone know about this basic definition. But guys, actually there are certain threads running in the background. So Banta will explain what his definition is different from Santa's definition. So Banta replied, no, it is not that simple. Remember, though bank can earn interest by giving away loans, but it is also very risky. There are many cases of loan defaults. This is absolutely true, guys. And this way banks can put all our money into high risk areas. It has to be protected. Okay. So Santa replied, how our money flows in the market. What's your perspective? So again Banta replied, RBI has made it mandatory that upon receiving say rupees 100, banks first have to deposit rupees 4 with RBI. Guys, I'm taking an example of 100 rupees. 100 works examples. So every calculation will easy to you. Banks first have to deposit rupees 4 with RBI. RBI keeps this rupees 4 in the current account and hence bank do not receive any interest on this money on rupees 4. Okay, this is known as cash reserve ratio, that is CRR. So guys, I know very well you have understand what is the actual functionality and the meaning of cash reserve ratio, that is CRR. And guys, CRR is currently 4%. Okay, so there are certain doubts in Santa's mind. So let's see. Santa, okay, then again Banta replied, RBI has also made it mandatory that upon receiving say 100 rupees, banks need to compulsorily buy central and state government securities of rupees 21 rupees 50 paisa. This calculation is on rupees 100. Of course, bank will earn some interest income here. This is known as statutory liquidity ratio, that is SLR, okay, which is currently 21.5%. I think you guys understand what is the means of SLR. Okay, every public sector bank need to compulsorily buy central and state government securities of rupees 21.50. Okay, so bank will earn some interest on here. This is known as statutory liquidity ratio. So again, Santa, okay, so you mean to say that upon receiving rupee 100, banks can spend only rupees 74 rupees 50 paisa as its own bill? It's again question in Santa's mind, like if I have paid 26 rupees 50 paisa in RBI's account, so bank have only 74 rupees 50 paisa and bank can function with 74 rupees 50 paisa. This question is being asked from the Santa's side, and see what Banta replied for this question. Banta, correct. Your speculation and your assumption is 100% correct. 100 rupees minus 4% from CRR, 21.50 from SLR, both the percentage deduct from 100%, so it's all about 74.50. Now bank can function in 74.50 rupees if you submit 100 rupees in a bank. It's all about the basic and background threads are running in the functions of a bank. So Santa, what you were saying that banks can also borrow from RBI. What interest bank pay to RBI? This is a very common question asked from Santa. So see what Banta replied here. So Banta, it's turn to Mr. Banta. Before 30th September, banks were paying 8.25% interest to RBI, okay, when it borrows money from RBI. Now this rate has been reduced by 50 basis points. So banks now need to pay interest to RBI if it borrows from RBI at the rate of 7.75. 50 basis point means 0.50% has been deducted from overall percentage. This is known as repo rate. Repo rate means repurchase options. Okay. So again, Santa, can fixed deposit rate be affected by reduction of repo rate? It is a very important question, guys. You must need to understand how can you answer if someone asked, can fixed deposit rates be affected by reduction of repo rate? So see, let Santa. The question comes from Santa and Banta is replying now. Of course, if bank get money from RBI at the rate of 7.75%, why will bank pay higher interest to you and me? 1 year FD rate is already revised by many banks and it is equal to or very close to 7.75. It's all about the mechanism. Santa is asking another question. What as now banks are getting money at a cheaper rate, then they should reduce the loan interest rate, that is passing on the benefits it receives. So Banta is again replying, correct, they should, and on that hope market is cheering, market is boosting, market is booming. If companies get loan at a cheaper rate, they will likely to expand their businesses. That will create more jobs, more income and boost the economy. Again, Santa has another doubt, like how is inflation linked to this? How is inflation correlated to the economy or correlated to the monetary policy? So again Banta is replying, see, when loan becomes cheaper, guys, very important flow here, see very carefully. When loan becomes cheaper, people tends to borrow more. Okay, this is a human tendency. That means people will have more money to spend. This will increase the demand for goods, and if supply does not increase to match this demand, then prices will increase. Guys, I am telling you a very basic example. Let's suppose that if you are a government employee and on the occasion of Diwali festival, government is going to give you a bonus. So definitely when you have the money, your purchasing power will increase. You will increase television on the festival, or you will purchase like gold for your wife, for your son, for your daughter. So it's all about the increasing of purchasing power value. So if market doesn't fulfill your need, the goods and the supply and goods are low, then there will be a condition of inflation. So inflation directly relates to monetary policy and economy circulation. So Santa, so there is a chance that inflation may rise also. It is a very important question. And see Banta, well, yes, but inflation depends on many other factors as well, like production, industrial and agricultural, manufacturing, export, import, foreign currency, moving, etc. So inflation may increase or may not increase. It's not a big deal. Santa, one last question. Like we deposit our money with banks, can banks also deposit their money with someone? Very nice question asked by the Santa. How Banta will reply this for this question? Banta, yes, they can deposit with RBI and earn interest too. This interest is typically 1% less than the repo rate. This rate is known as reverse repo rate. Guys, you must need to understand the reverse repo rate always less than 1% to the repo rate, and in this rate RBI and earn interest too. Okay, this interest is typically 1% less than the repo rate. Santa, great. So now I understand CRR cash reserve ratio, SLR statutory liquidity ratio, repo rate, repurchase option rate, and reverse repo rate, and their impact on deposit rate, loan interest rate, and on inflation. Santa said thanks to Mr. Banta. Banta, welcome. Actually, Banta has given all the answers to Mr. Santa. So guys, let's subscribe this YouTube channel and kindly share this video, and if you have any doubt, please ask in comment section, and please raise this voice among your friends and some banking aspirants. Okay, it's an initiative from my side to all of you. So watch this video and share your feedback. Thanks guys for watching this video. Have a nice day.